Hi everyone and welcome to Investing in Canada. The objective of this course is to help you make your investments in the most efficient way. So let's start with the video. So if you haven't done it yet, please subscribe and activate the notifications to get videos like this. Our channel is EduFin Wizards on YouTube. You can also get access to the complete course on Udemy or Skillshare. The links are in the description. Okay, so we will continue our discussion about real estate. So in the last video we saw what are the ways of investing in real estate. Today we are going to talk about what are the benefits of investing in real estate. Okay, so let's start with the video. So biggest benefit that most people go into real estate for is the price appreciation that real estate generally receives. So if you see, the Canadian housing market has averaged a 6.11% yearly appreciation over the last 15 years. That means the average appreciation, right, since for the last 15 years has been 6.11%. Now this is the Canadian average. City wise it's very different. So if you see GTA or like the Vancouver belt, last 15 years it has appreciated a lot, but if you see like the Calgary belt, it hasn't appreciated that much in last 15 years as compared to those two regions. Okay, so the city wise dynamics is very different, but average appreciation in the last 15 years has been 6.11%. Okay, now the market doesn't grow linearly, so it is not that each year you get 6.11% appreciation. So some years the appreciation is high, right? Some years the appreciation is not there at all. In fact, it might go negative, like it went briefly before the start of the pandemic, and it might be very high. The pandemic years has the appreciation has been very high in the real estate market. So the appreciation is not very linear, right? The prices might go up, they might go down, but on an average in the last 15 years they have gone up by 6.11% per year. So one of the major reasons why people invest in real estate is that they expect that the price of real estate might appreciate. The second reason why people invest in real estate is the rental income. So when you buy a place, you can rent it out. Either part of it you rent and some part you stay, or you rent the whole thing. So rental income is the second objective for people who go into real estate. It could be the primary objective too. If you want to create a passive income stream, right, you might want to get into real estate and then rent those real estate properties out so that you get a steady source of cash flow. Now the rental yield on an average in Canada is 3.91%. So what is rental yield? Rental yield is how much rent do you get as compared to the property price. So if property price is 100, on an average rental income on that property that is priced 100 is 3.91% in Canada. The average rental yield in Canada is 3.91%. So if you buy property worth $100, on an average you can expect to get $3.91 per year as a rental income. Now as compared to United States, that is quite high. Canada has a higher rental yield than United States. That is why the cost of living in Canada is higher. One of the reasons of higher cost of living in Canada is rental yields are high, the rents are higher. Okay, now the rents are not same across different cities. So if you see, right, Red Deer, then Edmonton, Calgary, that is Alberta, generally has a higher rental yield than like places like Toronto or Vancouver. So these are the top 10 cities in Canada based on their rental yields. Okay, so if you see Red Deer, there is a 13.93% rental income yield in Red Deer. So it means if you buy a property worth $100 in Red Deer, you can rent it out, get an expected rental income from it worth $13. Now one of the reason is the rents are not that much low in let's say Calgary as compared to Toronto or Vancouver, but the property prices are quite lower. So you buy more bang in Calgary as compared to Toronto and Vancouver. So if you see, lot of properties in GTA area as well as Vancouver belt are not cash flow positive. That is, expenses like mortgage and all are higher than what you get in the rental income. But there are a lot of cash flow positive properties, especially in Alberta, also in Saskatchewan and some parts of East too. Right, if you see Calgary for example, the rental yield in the city center like the condos and stuff, it is 7.68%. So if you buy a condo worth, let's say $100,000, you can expect to get a $7,680 in rental income every year from that, right? So that is quite high as compared to places like Toronto or Vancouver. That leads to Calgary, like Alberta, Saskatchewan, Halifax, Nova Scotia being a better rental markets, right, for an investor than some places like GTA or Vancouver. Okay, so if you're looking for rental income, passive rental income, these places could be a good bet than GTA and Vancouver. And it's not because the rents are not high. Rents are higher, of course, in Toronto and Vancouver, but the prices are way higher than what rents get you. That's a problem in those cities. Not too much, not like that in Calgary. For example, you can get a good enough condo below 300,000 even in downtown Calgary. Right, you can't get anything in 300,000 range, right, in let's say Vancouver or Toronto, and you can rent it out at a decent price too in Calgary, right? So look at rental income and rental yields whenever you're an investor and want to create that passive income. Now let's summarize the benefits that you get when you invest in real estate. So if you're renting, you're currently paying someone else's mortgage because rent is an expense to you and you don't get anything against it. But if you're paying a mortgage, you're building your own home equity. So if you do not have a home, right, and you're renting, it's always a good idea, irrespective of market conditions, to at least get one small little place for yourself so that you start building home equity. It goes towards your home equity. Okay, instead of paying someone else's mortgage, you might want to start paying your own mortgages. This is one of the key wealth creation principles that you might want to follow. Now, there is a big benefit in first home that you buy. So there is no capital gain tax on the primary residence. So one residence that where you stay, right, there is no capital gain tax when you sell it. So what do a lot of people do? A lot of people use this to scale up and scale down. So when you're young, you start with an apartment. As your family increases, you go into a detached home. Then as you become empty nesters, your kids leave you, then you again go back into apartments. So you buy an apartment, few years you sell it for a profit, then you get into a house, right, you build your home equity into that, and then when you scale down, you don't have to pay any tax because that becomes your primary residence. So a lot of people do this value chain upwards. They start with an apartment, they go into a house without paying any taxes on the gains, then they downscale to, that is, they sell their house, come down into an apartment without paying taxes again, right? So this is the benefit that you get on primary residence. Primary resident you can designate. Okay, so if you have two properties, one property will be your primary residence, the second property will be your investment, right? If you have just one property, by default that one property becomes your primary residence. Okay, so it's important to note there is no capital gain tax on primary residence or principal residence in Canada. Okay, then you get access to real estate appreciation. You start building your home equity. Home equity is value of the house minus mortgage. So as you pay down your mortgage month on month, the home equity in your home increases. Also, if real estate appreciation happens, the home equity increases. So you keep on building your home equity when you buy a house. You also can get access to a passive source of income called as rental income. So if the rental yields are high, then after expenses you might get a nice cash flow of $400-500 from your rental property, right? That becomes your rental income, and that is passive because you're not doing anything actively to get it, and it's a good source of income that you should look at. Okay, so this completes this small recording. In the next recording, we are going to see what are the things that impact real estate prices. Okay, so what is real estate price dependent on, especially in Canada. Okay, so if you like videos like these, please subscribe and activate the notifications so that you're updated whenever we upload a video. Our channel is EduFin Wizards on YouTube. You can get access to the complete course Investing in Canada on Udemy or Skillshare. The links are in the description. Thank you for your time. See you in the next recording.